Good morning, everyone. I'm Vince Lancy, and it's 8:54. We're having some technical difficulties on the recording side. So let's redo this. Okay. Today, we learned that China sets the gold price. We're going to get right into it, or Shanghai wins again. Specifically, COMEX capitulation. After dipping to just below 3,100 late last week, gold has mounted a sharp rebound. As of Tuesday evening, Wednesday morning, it was trading back at 3,300, reclaiming the same level where it ended in April. There's a reason for the recovery, as cataloged here days prior. In a note to founders Monday morning, we stated the following. Three important things stand out in our reading of this Deutsche Bank analysis. They point out COMEX's lack of volumes, implying China's controls of global price are even more stronger than they were. We call that the COMEX death watch. They also noted China's ETF buying has been massive, but their pukes or liquidations have been less cyclically big, cyclically speaking. We counted that as another important point showing the changing dynamic of China's playing. China's SFE COMEX premium spread this time has remained sticky despite a historical tendency to disappear after China allocates gold to its investors. Now, we said then, we said all this Monday at 7:30 in the morning. Quote, unless this changes, the price trend will continue higher. And there's that post. Now, we didn't send it out to premium because it was an undeveloped idea and we were waiting for more confirmation. And lo and behold, that confirmation came in. Excuse my screen there. Today, Goldman makes the same point. According to a Goldman comment via a ZH Premium post, China is back on the bid. Specifically, renewed onshore buying during the Chinese night session in Shanghai had reignited U.S. demand. Open interest has jumped up 3% for gold and 4% for silver, driven by the Shanghai COMEX spread narrowing towards the Shanghai price. We say the West capitulates, and I'll tell you why right now. If this is the price in China and this is the price in the U.S., for the last 10 years, it's been like this. This is the price. China buys, China closes, it reasserts. You've all seen that, okay? Now, as China's pricing power increases, China buys, COMEX capitulates higher. So for the last 5 years, it's been China buys, it reasserts the COMEX, but a little bit higher level. So buy 10 years ago, buy 5 years ago, buy China price. So you're witnessing the gold revaluation. You're witnessing the actual reset. Goldman's trader also pointed out something even more notable, as we also did. Onshore positioning has held firm at elevated levels in Shanghai, even as gold fell 8% from its highs. That resilience stands out, especially considering the typically momentum-driven nature of the domestic trading crowd. Shanghai traders, not the bank, not the insurance companies, Shanghai traders behave like U.S. speculators. Speculative, short-term momentum. They buy when it rallies, they sell when it drops. They buy 100 contracts when it rallies, they sell 100 when it drops. However, they've been buying 100 contracts and selling 50 contracts recently. So their buying has become sticky. We feel we know why that is happening, and that's going to come at another time. But just a little bit of comment here. This is how you break an exchange's franchise holding on pricing, by making the market resolve differences at your price. COMEX is slowly capitulating, and with it, U.S. hegemony in gold pricing. As I had said yesterday, part of this blame can be laid at the LBMA's regulatory feat for not protecting Western global wealth by zealously guarding its franchise. Gold is money, and the West has much less of it now. Coming soon in premium, we have a couple stories we're working on. Last night, Shanghai fund traders returned, as we just mentioned. We're going to go into that into more detail in a premium post. Second, we believe China will spend even more than expected to stimulate demand and to preserve their government. Not just to stimulate demand, as everyone's talking about, but to preserve their ideological government management. We'll get into that another time. That is, I think, very significant, and it's tied to some work that we read by T.S. Lombard. Third, why Donald Trump is unlikely to succeed in cutting government spending, what his real choices are, and its outcome. Donald Trump needs to cut the budget. He needs to shoehorn spending in while finding cuts elsewhere. He's not going to be able to find the cuts. And this realization for us, something that's been on our radar, but this realization for us was very pointed out very nicely by David Stockman in his report today. We're going to go through what we think. David tells you what happens. We'll paraphrase that and put a link to his stuff, but we're going to tell you where it goes. And it goes to a weaker dollar. It goes to a weaker dollar. That's what you have to do. For founders, we're also going to share why China's central bank resumed gold buying when it did, why they're purchasing more, and what that gold is likely for this time. Meaning, not buying just for their own central bank, not buying just for insurance companies, not buying just for retail, buying for another reason entirely. And that reason will be extremely important in coming out and making gold's valuation and pricing recognized globally as being dictated by Shanghai. Data on deck. A lot of talkers today. Related posts. You can see those related posts. We're going to keep it short. There's the markets. Gold's up 13. It was up 20. Silver's up 7. It was up significantly more. Platinum still up 17. So now you're looking at people covering shorts in platinum. I do have 4 charts I want to show you here. Top right-hand side, that's gold daily. Alarm goes off. Above here, you're bullish to this midline, possibly this line. Top left-hand side, that's platinum. Platinum above 1,000. Excited some shorts that had sold it here. They sold it here. They sold it there. And they said, oh, shit, let's cover. And they started to cover. 1,000 is a big psychological number, and I think retail is also buying it. Lower left-hand side, that's the Japanese 40-year bond. Let's put that up in a monthly there for you. That's the monthly yield. I'm not sure how far it goes back, but that bond, I think, is trading at its all-time high. And that's a sign that the government, while it intended to let inflation fester or manifest and let the yields fight it, they're a little bit concerned about that right now. And because they're concerned about it, they may have to do yield curve control again. And that's one of the reasons gold is rallying. Now, going back to daily and closing with silver here. Wrong chart. There we go. Silver, dotted line above, dotted line below. I like the market above that. I hate the market or like being short the market below that. I'm Vince. Have a great day.